Xuan received his PhD in economics from RMIT. Is actually, I looked at the website, is Royal Melbourne Institute of Technology, which is a very reputable university, as we all know. And you are now working, you have spent some years in the industry, but now you are working in Vietnam National University, which is top, at least one of the a few tops, university in Vietnam. And you are actually, currently you are the head of economic department in Faculty of Economics and Management, and you also have a school, international school. So that says you are now doing a lot of administration as well, in addition to your research. And Juan's research actually has covered quite a lot of different subtopics, but I can see macroeconomics, monetary economics, energy economics, and environmental economics are those. I do not know whether you do the energy or environmental economics from the firm level or on the macro level, but they are all related. And also you have done some corporate finance related research and SDGs, etc., etc. So people can see Juan has published in some good journals, and those journals, I think they are very good in terms of energy economy or climate, and including financial research letters, etc., etc. So without further ado, I think people are coming for this topic and for your presentation. So I give the floor to you, and you can start. Welcome to join us and to contribute to our network. Thank you. Juan, it is your floor.
Yeah, thank you, Professor Hongbo, for your nice and kind presentation. Actually, introduction. And hello, every distinguished guests and professors. So my name is Hoa. My name is Hoa, H-O-I. You can call me Hoa. So currently I'm a lecturer in economics at the International School, Vietnam National University in Hanoi. And actually, I am also exploring some research with Professor Hongbo. So through her invitation, thanks to her invitation, I'm highly interested in joining you and also broadening my network. So, and hopefully I can learn from all of you, as all of you are from a reputed, highly reputed university and center. So actually, because I got my PhD in economics, so I only expanded to finance 1 or 2 years ago, very recently. So, but actually, this topic is I think this topic is interesting, and actually, although I'm not the lead author, the reason that of this paper, I have other papers that where I am the lead author. However, they are mostly they are mainly economics. And another reason that I want to choose this one, it is because the fact that it has just been accepted conditionally at financial innovation. So we are in the process of copy editing and also get to the final production stage. So this is the introduction. So for this paper, we investigate the impact of banking fintech on corporate innovation in China, and we focus on Chinese energy-intensive industries. And in this, as all of you may have known, so the problem of climate change and also carbon emissions so have inflicted serious consequences on our daily life. And actually, there has been a severe flooding in the central provinces of Vietnam nowadays. So a lot of people lost their life. So one of the main concern or top priorities for Vietnamese authorities and also and of course Chinese authorities is to achieve carbon neutrality. And carbon neutrality is a global main global concern and a global priority. And there are the problems caused by emissions and also climate change has led authorities to issue strict regulations and other incentives. And one of the main problem, during the transition to carbon neutrality, one of the hardest hit groups is about the carbon intensive firms, because they are usually one of the biggest carbon emitters. However, they face several difficulties. First, they are required by the government to reduce the emission and to transition to cleaner technology, production technologies. However, during their transitions, they are usually confronted with some challenges, because such as huge initial capital investment for the equipment installment, and also for research and development, and also for process innovation. And another thing is because as these investment in research and development, and also process innovation and equipment installation, they require huge initial capital. So these firms or these companies, they will not have enough money, and they will need to borrow from the bank. However, when they come to the bank or other financial institutions to borrow the money, these financial institutions are usually reluctant to lend the money for them, because, as you already know, so financial institutions around the world, they are also transition. They are also in their green transition, so they are reluctant to lend money to these carbon intensive firms. So this will lead to a mismatch between, or a gap between the needs of these carbon intensive firms and also the lack of available financing. And to fill the gap or to bridge the gaps, so there have been several solutions. However, one of the most promising solutions is about the use of fintech or financial technology. So why or how fintech can address the mismatch between investment needs and available financing is there through several channels. First, fintech can reduce asymmetric information, because fintech can help banks better identify risk, and also to mitigate the problem of asymmetric information, and to mitigate the problem of adverse selection. And the second channel is fintech or that financial technologies. They can help the firms they can help the banks to improve their external governance, and also to monitor and also minimize the unethical behaviors of the firms. Because thanks to the technological progress, so now it is easier for banks to monitor the firms' behavior after they get the funding. And the third channel is through the improvement in efficiency. So financial technology or fintech can help optimize the financial market mechanism. So it can channel the flow of money, flow funds from people who need the money from people who have the money to people who need the money. and thus and so therefore we decide to conduct the research, and the main findings of the research we conclude that the fintech bank the adoption of financial technology in banking can help improve or facilitate corporate innovation in these carbon emitters, and the financial technology in banking can do this, perform this function through the alleviation of asymmetric information and also the improvement in credit allocation.
Sorry,
so
Juan. So,
yes.
Juan, can I ask you to clarify how you define carbon-intensive firms?
Oh, so I will explain it in the section 3 about the data.
Okay, yeah. So it's a part of a Chinese firm. It's not all the firms.
Pardon? It's
a part of Chinese firms. You did not examine all Chinese firms.
Yes. We only focus on a segment of the firm, not on the entire firm.
Yeah. So let's hear from you later. So you continue, please. Yeah.
Yeah. So as Professor Hongbo just asked, so the energy intensive firm, they include some energy, for example, the steel, cement, and chemicals. And these the firms working in these industries, they are confronted with Chinese authorities restrictive or serious policies, and also the dual goals of the carbon neutrality. So these pressures, they impose severe constraint on these firms, and making the firms facing the dilemma. So on the one hand, for these firms, they need to transition to implement the green transition. However, to implement these transitions, they will need the money. However, because they are big emitters, so very few financial institutions, they want to lend them the money. So this is the problem. And this is almost like a virtuous circle. So and we hope. Yes. Feel free to interrupt me. So if you have if there is any problem.
Sorry, who is speaking?
I think that was a camera. No, a microphone unmuted. So I already muted.
Okay, great. Okay.
Yeah. So if there any questions, so feel free to interrupt me. So. And among the different solutions such as government subsidies or etc. So fintech emerges as one of the most promising tools. So according to the official statistic, so the total investment in the fintech, global fintech, reached about $95.6 billion in just 2024. And the fintech includes fintech implies the adoption or integration of advanced technologies such as big data, artificial intelligence, and cloud computing, and of course blockchain to the finance sector. And regarding it is about the global fintech. So regarding the China's fintech, so in China, the commercial banks, they still play a dominant role in the Chinese economy. And as the China, especially for social financing and financing business needs, so it is important, or it is critical for the Chinese authorities and to require and also for the banks themselves to integrate the technology into their financial services. And the main goals of the China's fintech strategy is to accelerate the fintech adoption and implementation in the Chinese banking sector to serve the real economy, to reduce the cost, financing costs, and to mitigate the transition risk. As we already mentioned, so energy-intensive firms in China, they are usually discriminated and being confronted with a dilemma, because they need to finance, they need the money for their transition. However, they cannot access it because they are emitters. So fintech can act as a catalyst or a mechanism. The first mechanism or the first channel or the first way that fintech can help these in energy intensive firms is because fintech, through its application, so such as AI, the use of artificial intelligence or blockchain. So fintech applications can allow banks to closely supervise and follow the firm's business activities, and therefore reduce the asymmetric information and reduce the adverse selection and also moral hazard that the banks can face when they lend money to the firms. And also fintech, through the use of fintech, so banks can offer new financial products and also make the financing channel work more smoothly. So with these effects or potential benefits, we propose that the adoption of fintech in banking will have a significant and have an increasing effect on firms' innovation. It is the first channel. Another channel that fintech can drive and facilitate firms' innovation is through improving the firm's financial resilience. It is about internal. So it means financial stability of the firm itself. So the adoption of fintech can also help enhance the risk management and risk monitoring of the firms, and also fintech can also help provide firms with stable and long-term cash flows to maintain or to strengthen their research and development activities. And so we propose the second hypothesis that fintech adoption in banking can drive corporate firms' innovation through the improvement of their internal financial stability. And fintech can also improve the firms, facilitate firms' innovation by improving or alleviating firms' financing constraints, and by mitigating asymmetric information and make the credit approval process more smoother. So fintech in banking can help reduce the financing cost and facilitate the credit approval process, and also improve the accessibility. So now firms can apply for credits anytime and anywhere. So as I already mentioned, so fintech can also help the bank get more information about the firm. And based on my own experiences in Australia, so I know some people working in the banks there. So I think 6 or 7 to even from 7 to 10 years ago. So he mentioned that their credit approval is very simple. So individuals or firms, they only need to upload the necessary documents, and then the bank there. So I think I remember it is about the Commonwealth Bank, CBA, one of the big 4 banks in Australia. they have the process. They have some application to scan the document and to even it is a scanned PDF file. They have some applications to scan it and to calculate some indicators of the firms or the individuals, and they will decide whether to approve the credit or not. So it is nearly 10 years ago. So now I think it should be much better. So it is a second channel.
Yeah.
Yes.
What you are saying is actually maybe true, but now I'm thinking, I think maybe we can discuss a little bit at this stage before you go further.
Yes.
Who are those banks that are providing fintech related loans? What is the connection between those banks, Chinese banks we are talking about, between those fintech related banks, the banks who are providing fintech products or lendings to those firms, and the standard or conventional Chinese banks? Who are they? And on the other side, you are talking about carbon intensive firms, Chinese firms. Who are those firms? Are they very big firms or are they smaller firms? I know you're focused on they are in difficulties because they are carbon intensive. So can you explain a little bit? Who are those banks who the banks who are willing to lend to those firms, and who are those firms? Are they large firms or are they? Think about those industries. They probably there are a lot of state-owned enterprises as well. So do you see my question?
Yes. So for the second question about the firm. So for the firms, so we also divide. So for the sample, so we also we conducted an analysis for the whole sample, and we also divided the sample into as state-owned and non-state-owned firms, and we also divided the sample into large or SME firms.
I know, but for example, why do state-owned enterprises want to borrow from, let's say, P2P or some, they can have access to formal financing channel, right? So my question is about what is the connection between those banks who are lending to those firms and the conventional or standard Chinese banks? Are they the same banks?
Yes, that's a good question. I will note it, and maybe I will need the help from my from the lead author.
Okay.
Yeah, thank you.
But that's something that I'm thinking while I was listening to you, because I can imagine maybe some private, small and medium-sized miners, coal miners, for example, they are carbon intensive, or they cannot get any proper loans from the standard system, so that they can borrow from shadow banking system, P2P, etc., etc. But if you think about those important players in the steel industry, in the cement industry, and they are very big, sometimes they are state connected. So I was wondering, why is this outside conventional banking sector loans are important for them? So what are you talking? Are you talking about the banking sector, Chinese banking sector, or are you talking about the loans that are really connected with shadow banking system? So, but you can answer my question maybe afterwards. But those are the questions that I think people are wondering, people are thinking about. So, shall we continue, please?
Yes.
Thank you for your telling me that you will ask your call also.
Yeah. I will need, because because the data come from they own the data, not me. So I will need to ask for them. Yes. So another channel that the fintech adoption. can help banks and facilitate the corporate innovation is through the disclosure, information disclosure. So usually for fintech is believed to facilitate firm to disclose the carbon data to improve the trust. And so therefore, we propose the hypothesis that fintech adoption in banking can drive corporate innovation by facilitating carbon information disclosure. And another last channel is through the bank credit supply. So the application of AI and big data can help banks to assess the credit worthiness of the customer more accurately, and therefore to calculate the probability of default better. So, and it also allows the banks to monitor how firms actually use the money. So, and therefore can reduce the financing constraint of the carbon intensive firms that are really or truly want to innovate or truly want to transition. So for the data, we employ carbon intensive firm from that are listed firms on the Shanghai and Shenzhen stock markets, and the main sources of the data come from the WIN database and CSMR database, and also China Urban Statistical Yearbook, and the time range of the data from 2013 to 2021. And as Professor Hong also just mentioned about the classification or determination of the carbon intensive firms. So in this, so I will post it into the chat box.
Oh, here. Okay.
It is, yeah.
That's fine. Yeah.
It is, yes.
Yes, we get it. So you can go back to your transparency, maybe. And so it's good that you have a kind of standard or criterion based on which you classify firm as a carbon intensive. I was wondering whether you have whether you do that very subjectively, but in fact you have some justification. That's fine.
Yes. And after some data cleaning, such as we also winterizing the top 1% and less at the bottom 1% of the data to avoid any to avoid the problems, and also we do other step of data cleaning. So the final data set consists of 668 firms from 2013 to 2021. And the baseline model is specified as an innovation is equal to is a function of the bank fintech, and plus a group of control variables, and plus the year and the firm fixed effects, and the dependent variable is a firm's innovation. And here we use two measures of innovation that are popular in the literature. So first is about the number of it is the number of patent application of the firm, and the number of patent application is divided into two smaller categories: the number of invention patents and the number of green invention patents. And we also test for the robustness of the results by using a different proxy for firm's innovation. That is the proportion of R&D expenditure over sales revenue of the firm. So it is just a robustness test, robustness check. And the main dependent variable of interest here is a bank fintech. So we collected the digital transformation index of the bank that engages in lending, and we weighted them by the proportion of the loan amount, by the corresponding proportion of the loan amount from the bank, and to calculate the bank fintech index of that bank, the fintech index of that bank.
And that is very relevant, because I think the construction of a bank fintech index for the firms is something is very important.
Yes.
But I understand, because I know Chinese firms, I know there is no fintech index on the firm level, but I can see loans, the bank loans that the firm can have on the yearly basis, for example. So I have the information on the loans on the firm level, but I do not have information on the element of a fintech. So how much is related to the fintech lending? So you need to go, according to you went to the banks and to get some information on the fintech's lending, right?
Yes, actually, we this is where my friends they got the derived data. So they derive it from the digital transformation index of the Peking University. So can you see it?
Yeah, I can see it. I know what you have done, and so you basically merge the bank's information, bank fintech related lending information, and the firm's loans information, and then you construct what you call a bank fintech index for the firm. So
Yes.
I wonder, how did you match the bank's information? How can you identify the fintech related loans and match it to the specific firm? Because only when you are able to match it, can you calculate this how much fintech related loans out of the total, and then you can say you have a fintech or bank loan fintech index for the firm. And so that was my question when I saw your model. I think this is a very important independent variable, because from there you introduce the element of fintech for firm lending or out of firm's total loans, and then you call it as a bank loan fintech or bank fintech index on the firm level, which is very good. But I think probably we need a little bit justification how you match the information from the bank side with the firm, so that you can calculate this proportion something.
Yes.
So that's my question. Again, if you want to ask your co-author, so let's talk about that later. But
Yeah.
do you have any answer at this stage to my question?
No, I think because actually the data come from them, so I will need to ask for the advice.
Yeah. So that's my question. Maybe you can dig a little bit deeper. And so only when your bank fintech index is constructed with the justification, can we trust the results? And then we can say, the more fintech related fintech loans, they are beneficial for firms' innovation activities. So that was my question on this variable. Because I know Chinese firm, there is no such information. You need to do a little bit of background work to be able to reach this. But let's continue.
Yes. Thank you very much for your question. So I will we need to consult with my friends. So in addition to the in addition to the core or main independent variables, so we also have included different other controls to such as the year or the age of the firm, the size of the firm, and revenue growth, board independence, and the leverage and capital expenditure. And we also add some city characteristic, the characteristic of the city that the firms are located, such as regional or city level GDP, population, and also infrastructure, etc. And it is the results of the baseline model. So sorry, it is a little bit difficult to follow. So patent, and we also have the general the total number of patent applications, and also it is about the invention patent, and it is about the green invention patent. And in the first three columns, so we include the year fixed effect, and but in the second, the fourth and the fifth and the sixth columns, we also include the industry fixed effect and also city fixed effect. So as you can see, the from the baseline model, so the all of the coefficients of all of kinds of innovation innovation proxies. So bank fintech have a significant positive and significant effects on all innovation proxies, and this is the baseline model. So we also try to invest to see whether the innovation has a threshold effect on. Sorry, we also try to see whether bank fintech has a threshold effect on firms' innovation. So it is the estimation of the threshold, and the threshold regression model. Sorry, because I'm not good at the estimation. So actually, the estimation is conducted by my co-authors. I was responsible for writing other parts. So this is so now I will come directly to the conclusion. So as you can see from the baseline model and also the baseline model, you can see that the bank fintech can significantly increase its innovation. No matter what the proxy it is, it can be a total patent application or green patent application or invention application. So at the end, the banking industry, fintech adoption in bank can significantly promote innovation and also promote the green transition of the firm as well. And we also do other robustness or heterogeneity analysis in the background. So we also divide the sample into state-owned and non-state-owned firm, and we also divide the sample into SME and large firms. And the heterogeneity analysis confirm that the impact is the strongest for large firms and also for state-owned firms. And in response to these results, so we have some recommendations for the firm for the three different stakeholders, for the government, and also for the financial institutions themselves, and for the firm themselves. And I think that is the end of my presentation. Thank you very much for your attention and listening, and thank you very much for inviting me. Although I'm sorry that if the presentation can make you a little bit disappointed, but hopefully for the next seminar or next, I can present another paper that would be when I have more time, so I can do a better presentation.
Thank you very much, Xuan. It's not about you need to present a perfect something. We are discussing things, so this is for the purpose of research communication. So that's good for everybody, including my colleagues or my friends who are in the audience. So we can always learn something. I learned something today from your presentation. For example, how to combine different data sources so that we can construct bank fintech index on the firm level. So I appreciated that your course is not here. So who was actually much more in the empirical part of the paper. But I do have quite a few questions on the empirical part. Yes. Maybe if you can take a note, and so you can discuss with your course. So I think China has, if you think about those two stock markets overall, it can be over 4,000 listed firms already. And of course, you do not consider financial firms. But even that, after excluding them, you still have quite a few thousand Chinese firms. In your study, in this paper, you only have 668 Chinese listed firms. And your argument is that you focused on those firms that are carbon intensive. Yes. I think China is a manufacturing big country, so a lot of non-financial firms are related to manufacturing sector. All the firms, I think they are all to some extent carbon emission firms. But my concern is that in this study, you actually suffer a serious sample selection problem. So you ignored a lot of other firms. You only focused on such a small number of manufacturing firms. And you can say they are more carbon intensive than other firms, but still econometrically, the result that you obtain. So for example, if you submit this paper to a reasonably good journal, I think the first empirical issue will be your sample selection bias problem. So to me, you should start from all the listed firms, non-financial firms, and then to include as many as possible. And then when you do the econometric analysis, you focused on the differences between those carbon intensive firms, this small group of firms, but you need to do the econometric analysis in the context of comparing them with other sample firms. So this is already standard. For me, I supervised quite a lot, many over maybe 12 PhD students. I think we all had this similar problems. We need to use, for example, the Heckman two-stage selection bias model. So that is a serious problem to me. If I was one of the referees who reads this, I would really mention this one as a very obvious issue. So I do not know how you respond. Are you willing to respond to me, or what do you say about it?
Okay, let me see. Let me share the data cleaning process.
So if you want to discuss this issue with me later, that's also fine. Okay.
Yeah.
So So that's also fine. But let me see whether we have other comments or questions from our audience here. Do we have any other questions? No?
If anyone has any question that I cannot answer, so I will write out the question and ask bring it to my co-authors. So.
Okay, that's fine. Yeah. Okay, so to summarize, actually, my concerns are, first of all, the sample selection issue, and secondly, yes. I'm not so convinced about what kind of bank lending are you talking about. And if you really want to make sure that this is fintech related, you should be able to identify those banks. So I'm really not sure about what banks are you talking about. I wonder this may be related to P2P lending, to shadow banking, or maybe the standard Chinese banking sector, commercial banks, which I think for all commercial banks, they may have a kind of a fintech element. But I was wondering, for this so important issue, let's say they are carbon-intensive firms. The government actually subsidized quite a lot of in terms of climate financing. So why did we not see this for this step? Why do banks not lending money to this type of firms that are really in need of promoting climate or green progress? So that's why I was wondering who are the banks that are involved in those fintech lending. So I think this is my second concern, if I can say that. And apart from that, I think, yes, you mentioned some literature, so they are all relevant. And your results are probably the little bit on this page, and larger firms and state-owned enterprises, actually the impact on those firms are even more profound than smaller firms and private firms, which probably is a little bit puzzling. So so you can think more about that. If you make it clear about who are the lenders and what they lend them, then you can probably explain the puzzle here, why Chinese large firms and state-owned enterprise firms, they benefited more from this fintech-related lending rather than proper banking lending, banking system, conventional banks, where they have a lot of subsidies from the government or policy support. So that's my comments. I hope we can continue to discuss those. If you like, just introduce your co-author, then we can discuss if you have any doubts or questions. And do we have any other questions here from the audience? Okay, so thank you very much, Xuan, for your presentation. Although you are not the lead author, but you did the job reasonably well. So at least we understand what the paper is about. And as I say that, I wish, if you need, we continue the discussion offline. So if there is no more question, maybe we should close this session since people are very busy, and including yourself, Xuan, you are taking care of your son's homework still. And thank you very much. Do you have anything to say before I close the session?
Yeah, thank you very much, Professor Hongbo and Dr. Meng Xie, for, I don't know whether I pronounce the name correctly.
Well, good, yeah.
Yeah, thank you very much for the invitation. Actually, although my presentation is not as good as desired, so it's really a good chance to start my participation in the network, and I do hope
Yes.
that I can join your. As Dr. Meng Xiang just mentioned that it is a weekly seminar.
Yeah,
So
so you're welcome, Xuan. And so I mean, we have over 1,000 people, you know, in on our mailing list. But people are coming and go depending on the topic. But as I say, this is a platform that we can have a serious research discussion, and I think everybody can benefit. Even senior researchers, they always benefit from such kind of discussion. But thank you very much, and welcome to join us for this seminar. And I think I should close this if there is no more question. Okay.
Thank you very much, Professor, and thank you very much, distinguished guest.
Thank you very much.
Yes, I hope to learn from you in the future.
And thanks for our colleagues who spend the time here and listening to this discussion.